Morning, Jim Barrett from RJO Futures, Monday morning, June 4th. The note and bond markets were lower for a change, and the market seems comfortable lower for a change. I mean, after last week's rip up to all-time highs, 152.19 in the bonds, 134.30 and a half in the SEP notes, we're entitled for a pause, a timeout. The yields have plunged so quickly, prices have risen so dramatically over the last 4 or 5 sessions that the risk reward on a near-term basis is sort of unattractive at these levels. We need some kind of consolidation. Whether or not we get it will depend on the headlines back and forth. There is obviously pressure in Europe to do something to put the finger in the dike once again, trying to get Merkel to agree to some kind of common European bond. Not a lot of movement, but a little movement in the sense that maybe they'd accept that to a degree if the European community as a whole got control over budgets in these various countries and I don't know about tax collection, but whatever. There's a little bit of caution crept in, understandably, as yields have screamed lower. People have to think twice about whether they want to tie their money up. We broke the 150 barrier for the first time. They want to tie their money up at 146, or they want to tie their money up in 30-year bonds, especially at 256 or whatever we got to here. So first part of the week here, a little caution. Now the numbers are still weak. The factory orders were disappointing. Non-manufacturing ISM tomorrow. We'll see what happens with that. But I don't expect any big uptick in economic numbers. So the backdrop is people will want to buy breaks in notes and bonds. Conversely, the inflation is obviously in control. The European numbers were good. Numbers in the U.S. are definitely going to be good going forward. I mean, look at the collapse in a lot of commodity prices, especially energy prices. Has all got to help, and so the bonds after this little pullback, notes and bonds, will probably stabilize at historically low levels. Resistance now. What was support in yields will now be resistance. I would expect a 162, 16 area in the 10-year notes to hold. So in other words, expect a market meanders a bit at the beginning of the week, but doesn't pull back significantly, but is unlikely to push into new high ground on a near-term basis. Anyways, they can be reached at 800-500-2461. Name Jim Barrett again at RJO Futures. Remember, there's a risk of loss in futures trading, not for everybody. Thank you.